Hello traders, Gary Wagner here. It is approximately 10 o'clock in Honolulu, 4 o'clock in New York City, the 14th day of September 2012, Friday, finally. And this is the Daily Report, our weekend review, part 2 of our special report on the Fed announcement of QE3. We have a continuation of what we witnessed yesterday, of course, not nearly as strong, but we do have a nice update in the precious metals markets with gold currently trading, as you can see, $1772.18, puts it up about $5 on the day. It has had a low of $1764 and a high of $1779. Interesting day in the silver market. It is currently trading up about 1 cent, but it has been lower in terms of pricing for the better part of the day. As you can see, current print is 34.64, low 34.20, and our high today is 35.01. So it has attempted once again to go to $35 per ounce. You know, yesterday's announcement by the Federal Reserve and the statement which followed by Ben Bernanke, Fed chairman, took many by surprise. In particular, the fact that the monetary easing, which many expected would finally be announced today, the fact that that monetary easing is a open-ended program, meaning they're going to initiate it and continue it up until they see the desired results, took, as I said, many by surprise, most importantly because he also included a statement which said that even if inflation begins to grow above 2%, which is where he has capped it, they would continue the program until they saw some sort of results or lowering of the current unemployment rate. And that's really what they're targeting. They're targeting by looking at mortgage-based assets so that they can give a real boost to the housing market itself, because that's going to, A, put many people to work building the homes. And of course, as Americans buy those homes, that is going to really stimulate the economy in a pretty strong way. I thought it was a bold move. I thought it was actually a good move because it allows him to actually have some ammunition or potential results, unlike what we saw in the last round or QE2. We're looking at our dollar index, and as you can see, it's Henkin format. It is weekly, but as you can see, we're trading down near the lows. Of course, a couple of days ago, we made note when we broke through 80. We saw it come down a little bit yesterday, but most of the move in gold that we saw yesterday was primarily buying as opposed to dollar strength. But we are continuing to see a drop in the dollar. In terms of where I think that this dollar might go, my personal feeling is now it's not going to be straight down, but I'm looking for it to inevitably go to the bottom of this channel. Now, how might it do that? Well, in the same way that we witnessed this market go up, meaning what you saw when the market went up was not a straight rise in the dollar, rather it was a seesaw effect, especially here, but a seesaw effect where it rose and then retraced. Here it consolidates, of course, and then it rises again. You get a small retracement, rises back to resistance here, and then you get this drop. What I mean by that is what I would expect in the dollar itself is that we would see a series of drops, corrections, drops, and corrections till it made it all the way down to the bottom of the channel. That's what I think is possible. Does it mean it's going to happen? Well, we don't know, but I believe that as long as we have initiated this quantitative easing program, QE3, we're going to see overall, over time, weakness in the dollar. And of course, weakness in the dollar will represent strength in gold. We're currently looking at a daily chart. It's in Henkin format. Let me go ahead and shrink the candle size down just a little bit. And as you can see, this is that breakout that we had above our resistance line. Of course, what we were looking at initially was a break, and this is, of course, where we entered the market, but a break above 1636, I believe, right around in this area here. As that market broke, of course, we initiated along. But you can see that once the market went past the resistance area, It came down, it tested it this one time, but we've had clear sailing pretty much ever since that on our daily chart. You can see in Henkin format, especially when we look at the candle size of the last few days, especially yesterday and today, we're seeing some really, really solid strength within the marketplace itself. We are still looking at a daily chart. I've gone ahead and switched up our charts so that we could actually look at our daily chart, straight candlestick format, with our major Elliott wave count. And as I said, I currently believe that there is absolutely compelling evidence that we have in fact gone into a major fifth wave right here. And of course, what is important about the major fifth wave is that, as you can see, with this third wave, we saw the markets move from roughly $1,300 to $1,900. That was a $600 move. In the first wave, of course, we saw it move from just below 900, 1880, as it moved up to a new record top. I believe this was around 1250. So we've seen these dramatic moves in our impulse waves 1 and 3, and the fact that we're in a major impulse wave 5, to me, is a very, very strong statement. What was interesting, I thought, was that although I was expecting a total of a 5 count within this corrective period, 1, 2, 3, I expected a 4th right in here. That's standard Elliott wave. We didn't get that. What we did get was this thrust right after our third wave. We were prepared for it. And the reason we got prepared for it was that we were looking at this 38% retracement, 1627, looking at these tops in the market right here. And as the market broke through the 27 and reached 35, which was my breakout point, we did enter the market. We did enter it from the long side. All through the week, I've talked about different areas that I think this market has the potential to go to, both long-term and short-term. And with QE3 initiated, the first thing is I expect a extended rally within the precious metals market, specifically gold and silver, but we're going to get pullbacks. We're going to get corrective waves in between the 3 impulse waves on an intermediate count. Now, on our intermediate count, we are still in wave 1, and once completed, once we do start to see a little bit of backfill, we will have a pretty strong indication by using wave 1 as our benchmark as to where we think that correction would go, and then also where we think that wave 3 would go, because we use these as our benchmark. But on a basic technical analysis study, there is no doubt that when the market came down, this is 1920 right here, the first thing that it did, of course, is it made these series of lows. When it went back up, and you can see that right in here, and you can also see that right here, it touched upon about 1800 to about 1802. And so the fact that we're trading right now at around 1771, my real target that I feel we have the potential to reach before we get that first corrective wave, wave 2, is going to be testing for the first time the $1,800 mark. In other words, I think that there is a likelihood that this market will continue to rise till about 1800 and then correct. Once it corrects, we have certain basic formulas that we'll look at to kind of plan where we think that correction will go to. Once we have a really good or strong indication, of course, we raised our stops yesterday, but once we get an indication of some weakness and we think that we're entering that corrective period, we're going to look to take some profits, actually a whole lot of profits in the market, and then, of course, following that, we'll look to re-enter it to ride wave 3. Wave 3 promises to take us above 1800 and probably go in and test this record high at 1920. My feeling is that there's good potential. It's probably going to come up and test this area up here. It might even make a play for just below 2000 before we go into that corrective wave 4. And of course, on the corrective wave 4, it'll take us down a bit. And my belief is that the 5th wave, intermediate 5th wave of the major 5th, will take us well into new highs above 2000. And that, in terms of a time parameter, I'm looking at anywhere between On the short end, 4 months to 8 months in terms of the time to get there. So I'm looking at an extended rally through the end of the year with 2 corrective periods, or our corrective secondary wave and our 4th wave. Now, silver has been very, very interesting in the way that it has been trading really today, because what we're looking at, this is a 720-minute chart, 2 bars, straight candlestick format. You see this dramatic rise, and you can see the fact that this dramatic rise itself really happened on the second half of the day, this being the first half of the day, and of course that was after the announcement by the Federal Reserve. You can also see that over these last 2 sessions, although it has tried to make a new high on the previous bar, was unable to, and in terms of the lows, you had a lower low, but most importantly, you've got these double dojis in both sessions, meaning overseas last night as well as today. You've had a market that's really been consolidating, and my sense is that as these markets go up, when you get a parabolic rise, a correction at some point is going to be absolutely healthy, not only needed, but expected. And I am right now looking at silver as potentially having that correction. But we're going to have to wait, and we're going to have to see absolutely some sort of compelling evidence. The only evidence that we have right now is the market's consolidating. And the reason that absolutely doesn't convince me the market's going to come down is that's absolutely the way it's been trading. If you take a look at it, you get these tremendous surges, you get these periods of consolidation, then you get, following that, of course, you get another nice surge to the upside. The market kind of forms a base, it consolidates, and as you can see, this stair step up. So the fact that it would be really consolidating in this area could mean one of 2 things. Either it's continuing on its rise up, and on its rise up, it's going to have periods of bursts where it has huge upside moves in prices. That's going to be followed by a consolidating period, a rest stop, so to speak, before initiating another burst to the upside. Next week should be a most interesting week. This week certainly was. This has been Gary Wagner, wishing you, as always, good trading. And we certainly got that again this week. We'll talk to you on Monday for another daily update and review. Bye-bye.